Right. Okay. Welcome, everyone. So today we are lucky to have Kaaren Hall here from AJX IRA Services. And we're excited to dive into a topic that can really unlock capital you didn't even know you could probably use. And that's through self-directed IRAs. So let's welcome Kaaren. And, she's a true expert in this space. And I have her book here, which I'm sure we'll get into. Just to kind of kick things off, Kaaren, what exactly is a self-directed IRA and what makes it different from, let's say, like a traditional IRA or 401k?
Yeah, that is the question. People just don't really get it. I mean, some people do, but most don't even know that they have access to this, like you were saying before. Exactly right. So this happens to be the 50th year of the IRA. Okay. Right. So it was President Gerald Ford. That's how long ago it was.
Oh my gosh.
He was the president who signed the ERISA Act into effect, which is the Employment Retirement Income Security Act, right? Went to effect in 1975. So for 50 years, you've been able to self-direct. So 50 years ago, they created the IRA. Whether it's self-directed or a typical IRA, it's one thing, it's an IRA. Okay, so that's where we start. But what delineates a typical IRA from a self-directed IRA is the asset class you can put into that account. So if you want to invest in the stock market, awesome. There are lots of financial advisors who are licensed who can help you acquire market correlated assets, stock market correlated assets. But the self-directed IRA is non-correlated assets. It's the alternative asset space. So it's things like, you're very familiar with syndications, right?
Yes.
It could be notes. It could even be buying performing or non-performing debt. Your IRA could loan money to someone else as long as they weren't disallowed to your IRA. We could talk about the rules, but so many different asset classes, cryptocurrency, precious metals, lots of different asset classes. Right. So all the rules for the IRA are the same, whether it's typical or self-directed. The only thing that makes it different is the asset class.
Got it. Okay. And so when someone's kind of thinking maybe they have or they think they might have a self-directed IRA, like what do they ask? What do they go to where their IRA is? How do they have this conversation? What should they be asking?
Yeah. Well, that's funny because if you go to some of the big brokerage houses and you say, is my IRA self-directed? They'll say, well, of course it is.
Right.
Because you can choose any stock, bond, or mutual fund that you want. So it is self-directed in that regard. So you may be misled, but a truly self-directed IRA will let you buy a house. Your renters can move in and then the renters pay the IRA the rent, for example. So if you don't know, you could say, hey, the IRA I have with you, can I use it to buy a house, for example? Or just call us and we'll tell you if you have a self-directed IRA.
Yeah. And so when it comes to the real estate deals and private real estate deals, why do you think most people don't know that they can use IRA funds for that?
Right. Okay. So I always like to use this analogy because everyone knows the Super Bowl. So you watch the Super Bowl and some big brokerage house has an ad on that all the time. You're always going to see that. The self-directed IRA world would never do that because if we combined all of our assets together, it wouldn't be enough to buy a Super Bowl ad. So that's why we don't know. It's because really with a, typical IRAs, I'm not saying they're bad. I have one. They're great, but we have a 401k, we have a defined benefit plan, all have market correlated assets. They're awesome. But those financial advisors are taking a lot more of our earnings as fees in various ways. So with a self-directed IRA, the fees are vastly less as a percentage of your total overall return on investment. Oh. So we're just not as big an industry as the typical IRA. Now, AJX has over $1 billion under management, and that sounds like a very big number. We're one of maybe, 40 companies maybe in the United States. And even all of us together don't even we're just a fraction of a percent. So I guess, or maybe maybe we actually equal a whole percent because it's about 4% of Americans who have self-directed IRAs if they have an IRA at all.
Oh, okay. Okay. So yeah, so it's relatively small. And so that makes sense because I would say most people that I talk to, when I bring it up, are not aware of the concept and their ability to do it. And once we get through all of that, they're thrilled to know that money that may be sitting there, they're not quite happy with how it's performing, or they just don't feel like they have a lot of say into what they can be investing in. They're thrilled to know that they can then use this for something like a real estate investment. So what types of real estate investments would be available to someone through a self-directed IRA?
Yeah, when I started UDirect in 2009, it was during the Great Recession, right? And so real estate was on sale 2009 to, I don't know, 2013 maybe, and going forward. It was on fire sale. Remember, you could buy properties on tape. So at that time, you could buy a full-on house for $50,000 in your IRA, have renters move into it, and then the renters would pay the IRA the rent. That was more common. Now we're in a different environment. Fast forward to 2025, the real estate market is very different. It's vastly different. So we don't have as many people buying just a brick and mortar house as we used to. So other ways to get into real estate as an asset class is maybe have a fractional ownership, which is oftentimes in a syndication if you're an accredited investor. Now, you could go deep on that for us, but if you're an accredited investor or a sophisticated investor, and you could get into a syndication, that's one way. Another way is to buy different kinds of real estate, like maybe raw land. Okay, so your IRA could invest in a parcel of property, and you think, well, what would I do with land? How am I going to make money? It's kind of nuts how you can, because you could grow a crop, or you could rent it to someone like a farmer to grow a crop. You could rent raw land to somebody to put in a windmill. You could rent the space out to someone else so that they could develop it, where you would be the landlord and they would maybe develop or do something on that land, like a leasehold situation. So there are lots of ways, like real estate's one thing, mobile homes is another thing, where it's less expensive real estate. And so those are some of the ways that our account holders are doing this. Yeah.
Yeah, I think the main thing too is just the flexibility, right? So when you're talking about some of this, that wouldn't even cross my mind, and I'm in this, and it's like, wow, so it just gives you that ability to get into investments that otherwise would not be available to you in a traditional IRA setting.
Exactly right. And we want to have the same opportunity to invest as the billionaires. The billionaires are in on these big deals. Well, thanks to syndication, we can be fractional owners of big deals. That you could see a hospital going up, and your IRA maybe could invest in it if they're taking investors. And then you have your IRA is a fractional ownership of this big building, which you could never do by yourself.
Totally. And that's what I talk to a lot of people that are getting a pretty low fixed return. And so when we speak to them and we tell them about the opportunities we have at AJX, for instance, they're blown away that they can then move some of their IRA funds and start getting this higher return with a company like AJX, great track record. They do all that research. It's like, it's like Christmas Day to them, because they're like, oh my gosh, I didn't.
How do I not know this?
Right.
Yeah.
And so the logical next question I get is, well, what is this process like? My IRA is sitting there. What is this going to look like for me to get this set up and moved over?
It's just not difficult. So we'll start there. I say it's a 3-step process, but before I go there, I say the number one thing you have to do before you even begin to open an account is to choose an asset, research that asset, do your due diligence. So say that's done. Pick your asset. And then it's a simple process of like for us, for UDirect, is to go on our website. We have a digital application. So you click, fill it out, takes maybe 15 minutes. That's opening an account. Now, funding the account, you can do that in one of 3 ways. The way you get the money in is to do a rollover from a previous employer plan, do an IRA to IRA transfer, okay, or contribute to the account from your own checkbook, because you've got contribution limits. Each different account has a different contribution limit instead of contribution rule. So you can ask us, you can ask your tax advisor, but we can help you. So those are 3 ways to get the money in. So you open it, then you fund it. Then when you open the account, we're going to reach out to you, introduce ourselves. You're going to meet with your transaction coordinator, who's going to say, what are you interested in investing in, and hold your hand through that process. So it just doesn't take very long. And we really are people love us for the hand holding that we do and explaining it, because it really is still a process that is not familiar to most, but not difficult.
I know that's what a lot of terms get thrown around, right? And so you don't want to feel like, well, I don't know what that is or how to find that. So that's what's so nice. I mean, we love working with partners like you, because that helps our investors feel like, okay, I have someone helping me through this. It's not just like, go do it and good luck, especially when it's so much money in your retirement account. You want to make sure you feel taken care of as you set up this new account. So that makes sense.
You don't want to feel like you're in the ocean waiting by yourself, like, oh gosh, dog paddling or something. No, we're not going to let you feel like that. for sure.
No, for sure. So what about just kind of opportunity wise? Why would now be a smart time to leverage a self-directed IRA for real estate investments?
Well, there's a lot of there's always opportunity. The market's always growing. There are different sections and different asset classes within real estate are always in a different state of flux. One day, multifamily is like, oh my gosh, everything. And the next day it's weaker. And then when it's weaker and maybe it's on sale, then you want to find it when it's on sale. Or same thing with single family, or maybe there's a really great opportunity to get in. There's maybe a path of progress situation. There's some of this in Arizona where there's like in Peoria area, and just throw this out, I have, Peoria, Arizona, there's a lot of development. For some area that's path of progress. I'm sure that's what you're doing too, is path of progress. So maybe some new development so you can get into a situation where there's a building where it's growing. There's a growing community, a lot of employment, a lot of use for a building, so the building will be successful once it's built. You want to look for those kinds of things when you're doing your due diligence.
Yeah. I'm always telling people because there's a natural tendency the market is going to always do what the market does, right? And so there's a tendency to say, I'm going to wait and see what the market does, or I'm going to wait, and all this different stuff. And so, while no one has a crystal ball, because wouldn't we all wish, I always think the most important thing is diversification. So being able to not have all of your chips in one category there. And so you can really utilize the ebb and flow of these different sectors and different asset types. Just really kind of protects you overall. Should something drastic happen in one of the different areas, it's not going to be something that you're going to feel as much if you have that diversification in place. And that's really where I see this self-directed IRA be able to come in, right? I think before that was kind of limited to people that were able to get into those deals with, a certain amount of cash on hand, but this allows to open a door that otherwise would have been a little bit trickier for you to get out of that traditional kind of IRA and where you're limited in terms of those alternative investments.
Right. And the average American may not have $25, $50, $100,000 cash laying around that they want to invest. But if they have it in a retirement account, that's already long-term savings. And you've done your due diligence, you're really happy with this deal. And then that money, it's already parked until you retire.
Right.
So it's not like you're using your living money. You're using the money you've already parked for retirement. And diversification, that is the word that I hear all the time whenever I talk to a financial advisor, is how important it is to diversify, just exactly what you said.
Yeah. So I'm just thinking about it. So when it comes to tax implications and it being in the self-directed IRA and then the, distributions, everything, do those go back to your self-directed IRA? Is that how that all flows, or what's the flow of money? How does that work?
Yeah, it's a really good question because there's a lot to say about it. So when an IRA acquires an asset, any expense of that asset has to be paid for by the IRA that owns it, never by you personally. That's what we call a prohibited transaction. And when an IRA creates a prohibited transaction, it's like the tax protected bubble bursts, it's game over, it all becomes taxable to you. So we can dive into the rules in a bit, but you want to avoid a prohibited transaction. And you do that by investing in assets first that are arm's length, for one. Now, remind me of your question because my mind is going popcorn brain on all these things.
No, just in terms of how the cash flow works. So if someone uses their self-directed IRA, invests in one of our deals, they're getting a distribution from us or a payment. Does that go back to the self-directed IRA then?
Yes, just like the expenses have to be paid, the proceeds must come back to the IRA or that owns the asset. So as a little cautionary side note, occasionally an asset sponsor will just accidentally write a proceed check to the account holder, to the person, and not to the IRA. So that is a little word of caution if you want to be really good at self-directed IRAs. When you've got one, if you ever get a distribution personally, what you really want to do is just to step away and give that check back to the asset sponsor and say, oh, you made a little mistake. Please cut this payable to my IRA. Because you never, ever want to cash that check. So that talks about cash flow a little bit. The money has to go back to the IRA. If it goes to you, just send it back and ask them to recut the check or resend the wire.
Yeah, because that's really what protects those tax benefits of why we're keeping it wherever I always tell people, wherever they fund the investment from, that's where their distribution is going to go back to.
Yes.
So just making sure that we have all of that lined up as part of the process.
Well, and there's another way sometimes that taxes come into play. with the syndication. So when you're a syndicator and you're raising capital, there's a capital stack, right? It's not all from one source. Some may be, the GP's capital. Some may be a loan. It may be equity partners like self-directed IRAs. So different layers of capital that go into acquiring a big property a lot of times. So if an IRA comes in as an equity investor and as opposed to loaning money to the syndication, then if any proceeds that are earned because of leverage can be taxable to the IRA. So I'll just park on that for a quick minute because it's so important to know with syndications. And you shouldn't be worried about it or blindsided or anything, but your IRA would need to file this tax form called a 990T if this is the case. How do you know? Ask your asset sponsor, and it's typically disclosed on the K1 that you get at the end of the year. Now, a lot of times there's been maybe a cost seg or some way for you and your accountant to mitigate any taxes through deductions. So you sit with your tax advisor, you file the 990T, and if there are deductions, you take them. But every year, your IRA will file a 990T document. The tax that might be due, and by the way, this tax is called UDFI, Unrelated Debt Financed Income Tax. It's not like you and I pay our income tax on a 1040. It's not like that. It's a tax just for the IRA. And so that tax will be paid for by the IRA.
Okay, that's super helpful. This is reminding me because this was in your book. Do you want to tell everyone on the call just so they know? Because this is a great guidebook. If someone is listening, they're interested, they maybe want to do a little bit of research on their own, where would they be able to find that?
Yeah, Bigger Pockets came to me and they asked me to collaborate. And I said, I would love to. And they were so fun to collaborate with, like really great people, And so you can find it on Amazon.com. You can also find it at biggerpockets.com/SDIRA for self-directed IRA. And so Bigger Pockets, you could find it or on Amazon.
And we can include all of those links and also a link if someone was interested in setting up an account with UDirect. We can include the link in there as well so everybody can click on that. If you do set up an account, then someone from Karen's team is going to reach out, kind of get you started with the process. We're always here on our side too to help with any questions along the way. Usually there becomes a point where we have to send over documents and all of that. So we'll all be in contact anyways. But is there anything else that you think would be important, just kind of from a bird's eye view to help investors understand?
I think so. Something that I like to talk about, and one thing is if you want to take away from this is contribute to your own retirement account today. If you're the take action kind of person, you can take some action toward your future self and your security by just simply contributing to whatever account you have now. Of course, you can open an account in self-direct. But I just like to talk about what retirement really is, because I was puzzled by it for a long time. And then, of course, being in the industry, I thought, well, how do we retire? And how do we actually do this thing? So like you were mentioning at the beginning, it's layers. So we diversify in our investing while we're working, and then we diversify in our assets while we're retired, like Social Security, your employer plan, your IRAs, your personal assets, maybe whole life insurance, maybe annuities. You have as many streams of income in retirement as you hopefully do. That's what you want to do, create streams of retirement for income for your retirement, I should say. So the streams of income are incredibly important to a healthy retirement plan, because like you say, you never know, something could go wrong in one sector, but you've covered your bases by doing a multitude of things to protect yourself.
No, that makes so much sense. Yeah, you don't want to have, again, all your chips in one of those buckets. It's right. How do I get started with making sure I have all of these set up? I'm contributing something in each of these areas. A lot of them you probably already are, but right. That'll give you a full picture of how you might be able to retire someday. Because I think a lot of people are like, how is this ever going to happen?
Yeah, well, I mean, this is when you want to go to a financial advisor and sit down and talk with them, because financial advisors are awesome for this, and they can really break it down and offer suggestions. They probably won't offer the self-directed IRA as a suggestion, but anyone listening today knows that you've got that freedom to do that and invest outside of Wall Street. So you just need a little bit of everything to retire well.
Absolutely. Well, this has been awesome. Thank you so much for this crash course. And we'll include, all those helpful links so people know how to get in contact with you, how to set up the account, how to get in contact with us. And hopefully this was helpful for everyone. And yeah, thanks so much.
Oh, thank you.